Good day, all. Ira Epstein of Linn and Associates with your metals market wrap-up for this Monday, the 24th of June, 2019, just after 4 p.m. Central Daylight Time. Breakout time in the gold. You know what the market's probably looking at is G20 coming up, making no headway with Iran. If you saw the Iranians today at the United Nations Council, it's not the appropriate time in their mind to talk to us. I guess it'll be the appropriate time when we're all at war, but it's whatever it is. The simple fact is you've got a stock market that's been on fire to the upside. You've got yield still dropping in real interest rates, and you have metals rallying. If you go to college and you were to tell somebody you have those three elements going on at one time, they'd look at you like you were crazy. Knocking on the door of all-time high in the stock market, gold market exploding, no inflation and falling yields. Whoa. And a Fed ready to potentially cut rates if we don't see anything positive, in my opinion, between China and the U.S., which is very much up in the air, but that's this week. So traders are positioning themselves for that. They're trying to figure out what to do next. They're asking themselves, where do you park money? And that's the important thing, because you can't do it in Europe. You got negative interest rates. You got negative interest rates in Japan. So investors are left with a couple of choices. Stock markets, which have been on a tear to the upside in many areas, and of course, hard assets, and you're looking at that in the gold takeoff today. This is still not an industrial metal jump. It's not happening. It's only gold that has taken off. When you look at this gold chart, the market today up to $14.30, up $18. You can see how the tear has been to the upside. This is the gold bull's dream. I hope you're all in it if you're the gold bull. The market's got the higher lows, higher highs, bullish as can be. You had a bullish crossover back here where the 18-day average in red got over the 100. I never thought it was going to do just that, but I certainly was writing at that point videotaping my gold report, which was on my website. I only keep it on there 5 days. They're not about history lessons. They're about what I think at that point in time. And we had certain price counts that have been getting hit, and another one is right up here now. In terms of being over the upper Bollinger Band, let's understand what these black dashed lines are. They're an algorithm designed to keep the market trading within them 95% of the time. When the market gets over them or under them, that's part of that 5% of the time. Now, one of the things I did is I went back and studied charts. And I started saying, well, what if I put on consecutive moves over it, take away one of those percentage points for each one to give me an idea what are the odds of the market staying over that band tomorrow? And that's what I've done, and I say it's 2%. Now, how it reacts from it tells me a lot more. Markets that try to hang in at the band, how long do they do that? Because you will see bands, what we call running the band, and it's a sign of strength. So to see if we have that strength, I look to see what are the slow stochastic readings doing. So you use a momentum study. Some of you might use relative strength, some MACD. I use slow stochastics. And when the numbers embed, now let me define embedding. Slow stochastic is the crossover of two numbers, and the difference in time is one uses, on the historical way that George Linn taught it, 3 days worth of value, 5 on the other, and George Linn was the founder of this. So when you look at it, it's the same formula, 3 days worth of data for the red, 5 for the dark number. When both numbers are staying over 80 consecutively, I call that embedding. Now you got to have at least 3 to do it. You didn't have this on Wednesday. You had it on Thursday, Friday, and today. So until the red line closes back under 80, I say this market gets well bought on the breaks. It's really that simple. There's more to it, because I teach in my charting course how to come in on those breaks. I won't do that here. That's not what the purpose of this type of video is. Suffice to say, I look for that, and I don't expect to see traders aggressively buy over a Bollinger Band. They can, and for short periods of time, it'll stay over, but eventually it gets under it. That doesn't mean it doesn't move consistently higher. It just gets to it, backs off, and so on. You're certainly not in this sideways action. That's over and done with. And by the way, on the monthly chart, you're trying to get a monthly breakout. Take a look at your monthly charts. So when I come to GLD, I've got the embedded reading. As I've been saying, and if you're watching these videos, I've been saying, this has been the leader, not the futures. And you've got the higher lows, higher highs. Now you've got your consecutive days over the upper Bollinger Band. You get a correction anytime. Tuesday reversals can set in. GDX, to see the gold miners exploding to these highs, that's what a gold bull wants. It's going right with it, and that's what you want. You want them to all be in harmony together. What's not going with it are other metals. When you see a number go like this and it keeps popping, it means you now need 91.73 ounces of silver to buy 1 ounce of gold. You can't even push that shopping cart if you filled it up. This is a number that used to be 16 to 1, 30 to 1, and it just keeps exploding because of world economies being in a funk right now. Gold has become an asset play, not silver. And you see in September silver, I've left the July contract. You're in an uptrend, higher lows, higher highs. This is more what I expect out of Bollinger Bands. You can get over it and you pull back under as you're looking for support. This market is, though, overbought. Do you see how the slow stochastic readings here are not over 80 sideways? They're just over 70. That's overbought. September copper, I've made the move from July to Sept. And I realize Julys have a bit more volume right now. But for the purpose that I do here in these videos, this works just fine. And I've got higher lows, higher highs, resistance showing up right where I'd expect it, the upper Bollinger Band. And would you expect this market to go up in front of the G20 or not? That is going to be the question that you're forced to ask yourself. Do they make headway, the two presidents, Trump and Xi, or do they just, very cordial, they agree that at some point there should be a deal between them, this isn't the right time. Who knows where we're going. But higher lows, higher highs, at a resistance point, overbought. In the platinum, you're in an uptrend. Higher lows, higher highs. You hit the upper Bollinger Band, you fell back yesterday, Friday, to the 18-day average, you found support, and you poked up again today. Unless you get back under right here, this 803 level, the trend remains up. Resistance, 826.60, clear that level, and you might be looking at 849.30. I can't tell you on the downside yet what would happen. First, you got to break the trend, but first support would be 796.90. In the palladium market, no surprise here. I think I've been very clear that we were in a massive uptrend that went sideways, built another base, and now it's challenging up to those highs. This is what you call a long-term bull market still. It hasn't shown any sign of breaking. It's classic. This is what you call running the Bollinger Band. Get to the right hand, both sides, and you work your way higher within the band. You get over, you get back under it. In the dollar index, you went down today and hit the lower Bollinger Band. Now, if we go back to Friday's low, 95.64.5 was that low. You just missed the Bollinger Band. I think, it's so close. What's the difference? 95.63.5. Today, for good measure, the market goes down, goes through it, and closed over it. So you've hit some downside targets here. Now the question is the dollar in a long-term bear market or not? This has been one heck of a breakdown. It's almost 2 full cents. And that happened off the Fed, taking a much more, if you will, dovish attitude towards the next round of what they're going to do in terms of monetary policy. Our good friends at Modern Trader magazine, and I understand this might be coming back. There's, from what I can see, maybe somebody new has bought them and going to put some life in it. It was my favorite magazine of the industry. This is one of the brochures that they had put out. I was able with them to, if you will, make it into a really nice PDF, bring it back. They didn't have all the copies of everything. I did. And here's your Gantt square of 9. What does that mean? How does it work? But whether it's for the NASDAQ, it works in other market ideas. The absolute benefits of relative strength. As you know, I use slow stochastics, but this gives you an idea. The money flow index. What about bottom fishers? In other words, people that are trying to come in picking those bottoms, and how do you optimize stops? They put this together. It's a lot of pages, a lot of color examples in it. Looks a lot like this so that you can see what it's doing, and it's a great piece for your library and your brain, another way to learn things. How do you get it? And it is free from us. Simply give us a call at 866-973-2787. 2077. You can go to our website as well at www.iraepstein.com. You'll see a carousel of free offers. This, by the way, is in our futures trading kit along with other brochures that we have. And you can always click up here if you're watching me on YouTube. It'll take you right to our homepage. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.